Ladies and gentlemen, welcome to the Fintech. Oh my gosh, the tech frenzy. I was going to say Fintech frenzy. We're going through another identity crisis. But that being said, we've got SoFi news today. We've got Robinhood news today, especially Robinhood news. Oh my gosh. Shift4 is in the news. And then if we can get around to it, I want to talk about just general investing behaviors to keep up with and TikTok. All right. But should be a great show. Let's jump into it. Why don't we start with SoFi, first of all? I think that's very interesting to people, obviously, on this channel. Probably be a less view day today because I didn't say that we're talking about SoFi, but I just wanted to test it and see. I get a lot of flack just for putting SoFi in all the thumbnails. So, but that being said, I mean, if news is news, then we got to talk about it. All right. I wrote a little tweet here just saying, looks like SoFi saw the $225 million anti-money laundering fees for Block and didn't want to take any chances. Let's see what I was covering here. This is Vadim. He's one of the greatest, sort of due diligence people on X that covers SoFi. He's the Bender 9000 of the Twitter sphere. If you guys don't know that reference, well, you need to get caught up on your SoFi history, okay? Because this man has changed the game for SoFi. Let's just quickly take a look at this, though. These are all of the new positions between January 10th and January 17th that SoFi is officially looking for on their careers page. Okay. One thing that really stands out to me in compliance is all these anti-money laundering jobs that just opened, as well as I think there's a couple other ones. Let me try to find them here. Maybe it's on the other page. There was, or no, this is both pages. I should be able to see it somewhere. Oh, sorry. Anti-money laundering platform and senior software engineering. And I thought there was one more. Could be wrong. Anyway, aside from that, on the anti-money laundering side, there's also a ton of home lending products. So on the business unit side, you have pricing lead, senior pricing analyst. You have, in the data section, data scientists for home loans. You can see this in engineering for home loans. You can see it in essentially every single category for the most part. There is some sort of, senior director of home equity business leads. It's actually all over the place. Senior pricing analyst, home equity on the SoFi Bank side. It's all over their careers page. So I wonder if this is really picking up steam. Now, is this them coming in seeing data from Q4 that's making them really bullish? Or is there something regarding the macro where they're starting to get really bullish on the future, potentially more rate cuts? But also, if you look at the big bank earnings, like Wells Fargo, Bank of America, a lot of these banks ended up showing much higher numbers in home loans than what people were particularly thinking about seeing. So if you guys watch my video today, talking about my predictions versus data-driven investing, or Chris Hager, as some people might know him as, one of the things was our difference in home loan originations. I think he said 400 million. I said 520 million. I think I might have him beat there. It's seeming like they are really pushing into this sector. Could be because of all the rate cuts recently. All right. He said in his note he kept it pretty low because what's it called? He said he kept it pretty low because Q4, not a lot of people like to move, but the large banks actually didn't see that in terms of what they ended up seeing. So potentially it was definitely the season for it, is what I suspect. Removed jobs from their careers page. Now, this is not necessarily removed for any specific reason. This could be removed because potentially the description was wrong. Removed potentially what I think most people are going to think is because the position is actually filled, and potentially if there is a cutback for SoFi that they don't want that job anymore. But looking at how much they're actually hiring for, I am sure that the high majority of these removed positions, if not all, are actually filled positions. Okay. So you can just take a quick glance at this and see what they're really looking for, or what they have been looking for that is currently filled. So very interesting. All right. Just a little bit more over here. And then on the Galileo side, I can give you guys a quick briefing without having to bring up the next image, but it was all Technisys stuff for LATAM, essentially. A lot of positions, but Technisys, both on the remove side and the new position side. Now, let's go on to Robinhood, because this is another one, obviously, by the title and everything, that I'm very, very much looking forward to. So Robinhood has been ripping lately. And if people don't, or people may not know just quite the severity of what I'm talking about. Over the last year, as my thumbnail describes it as well, the stock is up 350%. Okay. The low of this stock was essentially 1 year ago. So probably within the next 2 days or so, we'll probably see this number spike up really high, especially if it continues to climb. Like if we get above 50 and their low was 10, then, we're going to see these 400% growth rates. But, so it's a little bit selective there. Like if you were to go back a little bit, but even then, like if you were to go back to the $7 ranges, then you're looking at a 500 plus percent growth over this last little bit, which is like essentially where some of these people were buying it at, like Arnie and Amit and stuff like this. The only problem was, I think Arnie sold it a little bit too early. I bought it quite late. I bought it, I think around here. This sort of, there's a massive spike up into the $20 ranges. I was so sad that I missed Robinhood, and then they crashed down, giving me just a little bit of a dip. And I said, you know what? I have to be a shareholder of this company. And then I ended up doubling down over here on August 5th, whenever Tevis sent out a tweet that said, I'm going to buy Robinhood to have a lower average than Tanner. So going after my I don't know what the right word is, like my reputation, not reputation, just he wanted to hurt me inside, okay? But I ended up buying a little bit more to lower my average. He didn't even buy. Freaking guy. But you know what? There's always more opportunities to buy Robinhood, especially if you think that the market's going to continue to rip higher. And by the way, so let's talk about what some of these reasons are. I mean, the obvious is what they're doing in their company and what people are suspecting for Q4. So I can show a little bit of that off right now as well, but it's not like we haven't covered it previously. Let's just show really quick. So this is only up until essentially November of 2024, some of these numbers, and I'll show you which ones are 2024, which ones are straight assumptions, like 210 is not guaranteed. What we actually ended up seeing was 194.8 billion. So much, much higher than what we saw in Q3. But because there was such a very strong December as well, I just bumped up the numbers as well, because we're going to see a lot higher assets under custody because the market has ran, record breaking for some of these banks as well. So assets under custody is going to climb just because that's what you're going to see in people's accounts. But also they've seen a lot of market share growth in the crypto side. And I think that we're going to see assets under custody climb. 24.8 million is the current cumulative funded accounts that we saw in November. That's going to continue to climb up in December as well. I probably think that we passed the 25 million mark. What percentage of those people are, getting retirement accounts? What percentage of those people are getting the gold subscriptions and everything? That's all going to add to their quarter. This is what analysts are trying to price in, is essentially how unbelievable was this quarter, What we do know, essentially, is how much money that they've actually brought in on a transactional perspective for Q4. 220 million for options is essentially record-breaking for them. For cryptocurrencies, unbelievably record-breaking. 321 million is what I presume is going to happen. And equities at 55 million, once again, also very, very high. A lot of that is also coming in from, their retirement accounts that they're starting to get into. Other, I just kept at 20, but it's actually probably going to come in somewhere around 25, 26, just because of credit card expansion and event contracts that have already been launched and were very successful in December due to the election. Then it's just a matter of trying to understand net interest revenue. Okay, so one of the ways that we try to do this is, we look at assets under custody and pulling some sort of average from this number about what, how much net interest revenue is derived from their overall assets under custody. So this fluctuates greatly from 0.27% to potentially 0.18%. So I put it at 0.2. Maybe this is a trend that continues to climb down. Maybe I'm completely wrong on this, but essentially what we are looking at here is potentially over $1 billion quarter, not including contra revenue, which should be included in here, but even that should be around 50 million. Okay, so we're just climbing right around the 1 billion mark. And another interesting way of looking at this is if you have sort of like Seeking Alpha or one of these platforms that will show you how much analyst revisions have, fluctuated over this period of time. So take a look at this. Let me share my screen here. If we go to Seeking Alpha and go to, what am I looking for? Earnings revisions. EPS over the last little bit has gone one direction. Okay. So from January of 2024, which essentially was, 350% ago in this stock, has now climbed up to massive gains. However, you can notice this is very interesting. December of 2024 is at 95 cents of EPS. Okay. Very high. But December of 2025 and even December of 2026 is not far off from where we're currently sitting in December of 2024. You can see this if we switch over to earnings estimates, these same numbers here, right? What you're ended up seeing is analysts expecting not just this year, but next being 12% growth rates and then 9.7% growth rates. So you're assuming no future growth after this, even though the long-term growth rate for Robinhood is wanting to stick around 20%. This is not also including new products that they could get into, like, futures, which I actually think they're going to have a sort of Robinhood effect on that, where, analysts can price in what potentially their total addressable market is, but whenever you actually give it into the hands of the Robinhood user, they can take it much higher than what they originally thought. Look to options for that, event contracts for that. You can just see how willing they are to try their new products. Let's see. How do you guys think Robinhood is going to perform these next 2 weeks? That I'll leave that to the chat. I'm not going to have any say in that. I don't consider the next 2 weeks. I actually am buying Robinhood not for a trade, but for a really long-term play now, because of essentially the stickiness that they've had with their customers, the way that they've come back from a large controversy after the GameStop event. These types of actions are actually making me really want to hold the company long term, because yes, the market can have bad times and their earnings can really fluctuate on that. I'm not saying that every quarter like SoFi is going to be more than what it was previously, which I do believe for SoFi. They've shown very linear growth. But for Robinhood, there will be times whenever there's, bull markets that end up coming back. And those people who have had, good experiences with Robinhood will return back to that exact same platform. We will get, users, especially who are paying for the Robinhood Gold subscription, that end up staying or end up using, the cash accounts and the credit cards and stuff, that end up using it regardless if there's a downturns in the market. Now, it's still the high majority of their overall earnings. So Robinhood is going to be fine. Robinhood will still be hurt a lot from downturns in markets, but cyclical businesses doesn't mean that they're uninvestable or something like this. I see a lot of people that say things like that. I don't believe it one bit. You can hold through the highs and the lows. So yeah, it's been so far a slamming success on Robinhood. And it's just a matter of if they can continue to push out new products and be the great innovators of the future. We're not looking for, to be second place in brokerage. We really do want to eat away at sort of Schwab's market and become the largest financial institution company. So if they can do that, man, I'm completely on board and, really like what they're doing from that perspective. Now, this is also another aspect that I wanted to show off. I wanted to talk about just general market, behaviors that people should be taking in. If you guys are following the channel, or maybe this is your first time watching, I don't always follow Robinhood. Unlike the average Robinhood user who potentially is trading in and out of things, I really do not take that perspective. Okay. Brian Feroldi here has such a great tweet today that I needed to show it. Buying and selling after a quick 20% jump won't make you rich. Finding, buying, and owning the next Amazon, Home Depot, or Monster Beverages is what is going to make you rich. Okay? This is very, very important. Now, the reason why I bring that up is that I am not buying Robinhood for this macro environment. I'm buying them to be the next large financial institution. I'm buying SoFi for that reason. I'm buying Nvidia for that reason, Shopify, essentially every single company in my portfolio, other than maybe PayPal. Okay. So that is one lesson that is highlighted by the greats, but even I am going to try to tell you to also do that, even with my, much smaller portfolio in comparison to a lot of these other great investors. Like I'm talking, I don't know what Brian Feroldi has. I was talking more about the Peter Lynch's and the Warren Buffetts of the world that also try to, teach that lesson. It's not because they're trying to teach you something that they're not doing, right? The interesting part about Warren Buffett is he takes a very simple approach, and it's just letting compounding do what it does, and then people blame him for being rich. It's like, you could do exactly what he did. Not to every degree. I mean, he had a couple structures in finance that you could not replicate there, but there's also things that you could replicate that he couldn't, like artificial intelligence and the internet. So, there's still great compounders of wealth to take advantage for in our era rather than what he had going for him, which was more just a lack of compliance. Nice, Chris. That's fun. That's fun. Angela, did you pick any SOFX up? No, I did not. But it's very interesting. It might be a tool in my arsenal into the future, but just because I like how easy it is. But if anyone wants to know what exactly Angela is talking about here, I'll show you guys because this is very interesting. There are other companies like this, and Defiance has been all over these types of plays in the markets, but it's going to look silly because they just started trading 2 days ago. But let's go take a look. This is the Defiance daily target 2x long SoFi ETF. Okay. Essentially, what that means is that every share that you buy of SOFX, I knew something was wrong. You're essentially buying the weighting of 2 shares. Okay. So if it goes up, you go up twice as fast. If it goes down, you go down twice as fast. And you pay a management expense ratio for doing so because they are literally just taking out margin. Okay, so you are paying for that. This is not a way of subduing, margin fees and stuff like this. It's just all built into one quick way of doing that. You don't have to have multiple different accounts for, your margin and everything. It's just a simple equity that if it does crash 50% in a single day, all your money is gone. But it could be interesting as a way to buy SoFi at sort of a premium, almost like the TQQQs or something like this. But because it's a single equity, it can be much more volatile. So you really only need 2x leverage rather than the 3x for some of those indexes that move much faster. Is SoFi likely to hold Bitcoin during the Trump term? I would most likely, I would bet like everything against that happening. I don't think that they'll take a crypto stance. I'd be very surprised by that. I think that they'll offer it similarly to Robinhood to all of their customers, try to make it the best way to buy crypto. I know some of the products that they were rolling out before it got shut down was like, if you are DCAing into Bitcoin or having recurring purchases into Bitcoin, then they would remove the fee for doing so. So I think that they'll innovate on a couple products like that, but not necessarily get into things like self-custody of Bitcoin, having any sort of DeFi wallet or hold it on their own balance sheet. I don't think that they'll do any of that. I think SoFi, and the same reason why they don't come on this platform, on this YouTube channel, is they want to be taken very seriously. I would see Robinhood buying Bitcoin way before I see SoFi doing so. Yes, Alex, you're 100% right. I would not hold the 2x SoFi over the long term. You just get eaten away, through fees. But it is a good short-term play. It's not like I'm anti, or well, no, I'd say I'm pretty anti short-term plays, but I do them. I just don't make it my entire portfolio. I make it a tiny sliver of everything that I'm working with because I still like to have fun as well. But I know that there's a lot of people that really take investing, like whenever they say investing, what they mean is trading, and their whole portfolio is trading. And I'm just like not a big fan of trading for the bulk of my portfolio. And that seems boring. Okay. It's definitely not for the Lambo or homeless community, that sort of mindset that people have, like they're going to bet everything on tiny spec stocks and either make it or break it. I only have one life. I have to make it. So why not just take what I consider almost like a guaranteed path to success, which is investing in great US equities and holding them for the long term. You know. Now finding those is not guaranteed. Uh But what I actually find out that people do is that it's not that they don't find stocks that work, it's that they don't find the times to hold them, right? So like probably most of you have held companies like Amazon, like even Shopify or Nvidia or Tesla or Apple, or if you have many years under your belt, you've probably touched most of the best performing companies, but potentially haven't held them through their best years, right? There's a lot of people who buy companies on dips, see them run a little bit, and then sell. You know how many people in this chat have bought SoFi, especially whenever it was like in the $6 ranges and under. And then as it's ran to $7, $8, and $9 a share, they say, this is where it's turning around. This company trades in this sort of range, and I want out before it heads back down to 6, 5, or 4. And then they miss out on the 16s and potentially 17s. I am looking for that, right? And it's so funny because like I had someone put in a comment on one of my videos today saying, why doesn't this company move? And I'm like, dude, SoFi's up like 80% this year. Like that's a pretty freaking good year. Okay. Tell me that whenever it's at 7, and then we can talk about, sort of the market dynamics and what's happening in the macro and why it's all pushed down. But to tell me at SoFi after recovering quite well and bumping up the stock price quite a lot, to tell me that it doesn't move is the wrong time to be doing so. 1650, I'm happy to hold this all day. You know? Yeah, I'm sure TA does have an aspect in certain people's portfolios, or at least as like confirmation for whenever they already find a company that works very well. But a lot of people use TA as sort of their market research. And in my opinion, that's not market research. If you've read the book From Good to Great, it's worth noting most of those companies don't exist anymore. What's very interesting, actually, is most companies, at least public companies, don't actually go bankrupt. They end up getting absorbed by other companies. So they usually still have an exit, right? Which I don't think many people actually consider all that often. Yes, there are many companies that do go under. Probably most famously is like Nokia, which was one of the largest companies in the entire market, and then in a flash went to zero. I think they still are on the market for like $300 million, but like at one point they were the largest company. Um, but this is why you diversify. This is why you don't put all your money into one company, but potentially or well, at least the way that I look at it is I'm trying to find 15 of the best companies and buy those. And you still have to monitor. It doesn't mean do all your research and then stop looking. It means do all your research and then throughout your many years of holding this company, you know, like sort of reevaluate. So, um, yeah, TA is timing assistant. No, that's funny. Sure, I'll allow it. No, that's it's a good way of thinking about it, I guess. I hate to give bad news, but Jim Cramer is bullish on Robinhood. I hate to give the same bad news back to you. Jim Cramer's bullish on SoFi as well. All right. So that I don't really think is a thing anymore. I've never really believed in inverse Kramer. It's more of a joke than an actual way of looking at investing. If you are to pick every single wrong investment, would be as hard of a job as to pick all of the right ones. In fact, probably harder because most equities do well. So, yeah. Now, let's go ahead and take a little look into Shift4. All right, because this is a company that I admire. I like looking at. I'm interested to see what the relationship is with their old CEO. I think he's still current standing CEO, but Jared Isaacman. He is the current current head of NASA and is going to be stepping away from his post at Shift4. It's one of the big things that I had at versus this company was key man risk. Now, I've always held companies with key man risk, always, and I've never been punished. Shift4 might be the first one where I've held this company. I mean, aside from maybe like Amazon or something, but Jeff Bezos to Andy Jassy seem to have worked well. And Jeff Bezos is still there every single day, supposedly. So that is the same sort of aspect that I'm hoping for is, although Jared Isaacman did step away, is he still very actively, talking with the company, and potentially it's just such like it's his baby that he doesn't actually feel like he's able to let it go. That would be very exciting. How close is the new CEO, which I believe is going to be Taylor Lauber, and the old CEO, which is Jared Isaacman? I did reach out to Shift4 and asked to speak to Taylor, and they said, why don't you reach out to us after Investor Day, because we're going to answer a lot of questions there. I was like, all right, cool. All right, let's look at Shift4, however, because there's a little interesting dynamic going on here, especially over the last just 2 days or so. Let's look at this. Okay. Shift4, $114 a share. Very nice. Okay. Up 6.6% today and actually ran a very similar amount the other day. So 2 days in a row, we've seen these sort of 6+% days. What the heck is happening? I'm trying to find news on this. I can't seem to find anything. There's these, aftermarket runs in this company, and then finally it starts to pull out. But like over this last 3 months, so this is whenever he left the company, Jared Isaacman. So everything was going quite swell up until that point. Oops, that's not year to date, doesn't work anymore. Over the last year, like we've been climbing and climbing and climbing and climbing up to $116. Jared Isaacman left, crash, hold out this little bit, and now the stock is trying to run again. What the heck is going on? Black screen? You guys don't see what's on my screen right now? Is this true? Hello? You guys see and hear me? I don't see that there's an issue. Lies. Okay, cool. All right, perfect. Let's go ahead and go to Starlink really quickly. The reason why I'm pulling up this Starlink availability map and how we're starting to see more and more of these pieces start to get filled in is that Shift4 is actually filling out or is helping with the actual payment processing for all of Starlink. And as they go along, they're getting licenses to all of these countries to have payment providing in these countries. So one of the really interesting parts about this is, okay, all of the places that are in this sort of dark blue here is either pending regulatory approval or coming soon. Okay. You can see this starting in 2025, starting in 2025. I think there's a couple that say starting in 2026, but there we go. We've got Suriname. That is, am I going crazy? Am I nuts? Suriname is in South America? I thought Suriname was like over here. Am I nuts, guys? Is there two? I mean, it's probably in Latin America. I thought it was like over here. No? Okay. Anyway, one of the very interesting things about it's in South America. I had no clue. Anyway, so what I think is very interesting is as they start to get regulatory approval in all of these different countries, are they only going to service Starlink, or are they going to then potentially bring SkyTab, uh, over there to help restaurants in those areas, to potentially help with resorts? A lot of the areas that they're actually getting are big tourist areas, and so the resorts that they end up dealing with in North America and in a lot of places in Europe also have similar locations in a lot of those other more international locations. So, are they going to be able to just add on to those clients by Starlink bringing them to those locations via regulation they're actually unlocking? It's extremely bullish. It's just whether or not that you know how much of this is Jared Isaacson's doing versus Taylor Lauber's doing. And once I can sort of figure that out, then this is a slam dunk company to continue to invest in. I just haven't bought any more of this company since he's left, which is fine. I still have a decent size thing of Shift4. Could be a lot bigger, but haven't bought since. Now, one thing I think is really funny is an analyst. Oh, sorry, I wanted to show. Oh, never mind. An analyst on Shift4 actually put a $120 price target, and so people are saying, oh well, it's running because someone said that this is a $120 stock. I'm like, it's ran like 15% or a little bit less than that because one analyst said that it's going to a price that it's pretty close to. Like, you're running up from like what was it before? 104 to 114 because someone said it was 120. It wasn't even the highest price prediction in this stock. There's already been ones. Yeah, it was at $101 before it started running. This is crazy. I'm wondering, like, is there some sort of I don't want to get like too is this hostile takeover? Is this large institutional buyers, like a potential very large institutional buyer that is just buying in open markets at large rates every day? You know, that would be very interesting to see. Stick to financial markets. I had no idea. I thought Suriname was like literally near Singapore, like, or like Vietnam, or somewhere in those, somewhere in that area. I think the market just doesn't understand. For the reason I got into it was your last video, and the more gets Angela, what are you saying, that they just don't know about this company? Rome, Georgia, Athens, Texas, Paris, Tennessee, the whole world is moving. Like, Suriname was in like some sort of Southeast Asia and then has just sort of parted ways. Jeez. No, it wasn't really in $120, more around 116. We were hoping for that continuous move. You could be right, Angela, but I mean, where's all this exposure coming from? How does the stock move, double digit percentages over the last 2 days? Where's this exposure? Did they do some, like, did SpaceX shout them out recently? Like, what's the catalyst? You know? Okay. Let's take a look over to another piece of news, and then we got to get running because at 9:30 we have the Market Madness with Roy and a special guest, ladies and gentlemen. What are my thoughts on Hood? Aside from all the thoughts that I just gave you, uh, it's an extremely interesting company that is getting the attention of all new investors, but now especially, I think the big catalyst was the retirement account. So the average account that they used to bring over was around $4,000 per account, and that has gone up into the six digits. And so the accounts that they're bringing over on average have $130,000. So just think about the step change that they had in accounts that they're bringing over. In fact, it's been so fast that the amounts that you're bringing over have brought the average account from 4,000 to essentially 10,000 in the last like 2 quarters. Great. Now I'm the one who's late. Yes, you are. You don't like Affirm? I don't like the way that I don't like Affirm the same way that I don't like Uber. Like, I see why everyone invests in it. I totally get it. It makes a lot of sense, but there's a lot of uncertainty. Affirm, what I don't understand is, like, I understand they have good underwriting. Why can't the banks do that? If buy now, pay later becomes the number one, sort of new credit product for the next generations, what is stopping the big banks from having that product to themselves? And I think the day that that happens, where they really give a good push into buy now, pay later, people just simply will not need Affirm. The merchants will not pay their rates. They have by far the highest rates. PayPal looks unbelievably cheap whenever put side by side with Affirm. And like, I don't see how there could be a standalone player. They don't feel like a company. They feel like a product. The only thing that I really like about them is the CEO and honestly their past performances. They've done amazingly. I just don't know why people like. I wouldn't be loyal to Affirm. I'd be loyal to whomever is giving me the best product. And I have been a user of Affirm, but the only time I'd ever use them is with a 0% APR. So if they're going to just spread out my payments and I don't have to, like, I can keep my money earning interest in my own account until they want the money later on, like, sure, I don't care. Like, but the merchant has to pay for that. They're not giving away free loans. They're giving away loans. I mean, they have in the past. They definitely, I can't say they don't. But really, it's the merchants who are just paying your APR for you. It's the brand name. Nah. Nope. You don't think JP Morgan is a big brand name? Bank of America? Citigroup? Those are big brand names. I think the product is superior to those players. Like, they just really haven't given it a good try. And the companies that have, like even SoFi, have just given these half-ass lackluster versions of buy now, pay later. 4 payments split out over a little period of time. Whatever. It's too small. But PayPal, for example, gave a really good offering for buy now, pay later. Always 0%. That actually just changed. But for the longest time, it was always 0% APR. Built right into the checkout that people already know that's a brand name. But how do they face up against PayPal? Like, I've just always had a lot of questions. I don't have to invest in every company. If the company 10Xs, I won't even bat an eye. I didn't see it. Like, I can only blame myself if I saw it and I didn't invest. Comparing Schwab and Hood is the same as Affirm and JPM. No, it's not. No, it's not. I would believe you. I'd actually believe you more if you said like PayPal in a firm or something like this, like staying in the payments game. But JP Morgan doesn't, like, they have a holistic view of their client. What I'm trying to say is that a firm doesn't have a holistic view of their clients. Now they're trying to get into deposit accounts. They're trying to get into all these products because they realize like just how not sticky their product is. But a firm is a one-trick pony. And then they gloat because they're like, hey, look, we came out with a card. It's like, yeah, every company can do that. You know, what happens whenever Amex and JP Morgan and Citigroup and all the largest card distributors in the world just offer you what a firm is offering you? Do they eat like, that's not, I don't know if that's sticky enough. I'm not a fan of Coinbase either. I'm not a fan of Coinbase because here's one thing that I think Coinbase is going to do very well. They're going to dominate institutional crypto trading. Dominate it. If the United States government uses Coinbase Prime, everyone's going to use Coinbase Prime. Okay? The problem is the retail side makes all their money. And I just don't think that those products are going to be really sticky. Now, they'll never go away. There are always going to be people that benefit off like crazy amount of technicals, really, really like advanced derivatives on crypto and like the really niche crypto audience, which by the way are just even charging less fees because they're recurring purchasers. But what really makes money is, the average person that signs up for your thing to trade cryptocurrency. And I'm not 100% sure who wins whenever the big banks get that as well. What's really scary, or what I think is like the biggest shot in the foot, is like whenever these companies like Vanguard step up and I think it was Vanguard, and they go, actually, we don't want any part in this asset class. It's like, how about you make a freaking business decision rather than a political one and just let people decide what they want to do with their own money? Like I couldn't think of a stupider thing for them to do. Oh, we're going to take no part in these crypto ETFs. I think that guy was fired and then they put in someone new and then they offered it immediately. But like, how could you even think about sending that? Am I going to the Shift4 Investor Day? I'm going to see, but don't know yet. Have I looked at Lending Club? Oh, yes. I'm not a fan of the company, but I'm sure they are very undervalued right now. They just grow a lot slower and I don't like their brand versus SoFi. If Coinbase can be a $300 plus stock, just think about where Robinhood could be. Doesn't quite work like that, Zachary. Look up market cap rather than stock price. Doesn't matter one bit. They just have less shares than Robinhood. Who is highest in 2030, SoFi, PayPal, or Coinbase? In terms of the market cap? I don't know. I mean, I feel urged to say PayPal, but I don't know. SoFi and Coinbase could do great things during that time, but that's an interesting question. Lending Club. Yeah, no, I know LC. I've done their earnings call breakdowns. I think for like the last 5 or 6 earnings calls. I know them well, but not really a fan. Ladies and gentlemen, I've got another show in 15 minutes. All right. That is the Market Madness. We're going to be talking about more things than just fintech and a little bit of tech as well. But can't wait to see you guys there. We got a special guest. not really special. Don't get too excited, but just someone we haven't seen in a bit. Thank you all so much for watching. Really do appreciate your time. By the way, the reason why it's called Market Madness and not SoFi Weekly is because SoFi Weekly is tomorrow, ladies and gentlemen, which should be a very exciting show. But this is just something to hold you guys over for the Friday. Bye for now. Subscribe.